Thank you very much, Mr. Abel, for joining us on the program.
Thank you for having me.
Now, the World Investor Week ends today. What's the significance of this event, and how can this shape investors' perception about the Nigerian capital market?
Okay, thanks. And looking at the focus of the Securities and Exchange Commission as or the topic they've even chosen, which is more of mobilizing savings and investments. We all know that when we look at the savings rates as a ratio of GDP for Nigeria is still very low. It's below around 20%. And also looking at it based on household savings relative to income, still very low. Yes, we know it's really a very challenging problem, but we all know the concept of finance. If you are unable to save 10% of your income, even when you are earning 10,000 naira, you will also find it difficult to save that 10% when you are earning 1 million naira. So more of financial literacy, more of creating awareness, also enlightening investors on investment options, safe investment options, which also ties into their investment objective, also trying to understand their risk appetite, as well as the investment horizon. So it's really a welcome development that at least a week or a month is dedicated to focusing on investor education, investor enlightenment. And we believe that that would attract, create more awareness across the different segments of the population.
Now, due to low interest rates in the fixed income market, investors are in search for higher yielding investment. What should investors watch out for before making any investment decision?
Yes, thank you. This is a very interesting question. If we look at the last PMA primary market auction for T-bills for 364 days, rates dipped as far as 0.98% for a year. And when you're also considering that vis-a-vis the high inflation rate, it means that investors we need to seek for investment that can help bridge that inflation gap. So what investors should watch out for is once you confirm whether the investment is regulated, that is really very critical for investors to also looking at it in terms of the interest rates that you are being offered. You need to confirm and understand the business these companies are going into, even put in your fund. Also, looking at even for those that have fund, you need to understand what are their past performances. So that will give you an idea of how that fund will also perform in the future. So it's more of understanding the business you are trying to put in your money. If anyone is promising you certain interest rate and you can't also identify what that will be put into, then I think you should run away or
Now,
avoid it.
yeah, there are several investments offering ridiculous rates in the country. What's your advice to existing and potential investors?
Yes, thanks. We know what we call Ponzi schemes, and the structure that most of these people adopt is that they try to entice investors with high interest rates, and based on that, they pay out. They use the investment that is or inflow that they get to pay out any new client or those maturing clients, and that's you would see that when you look at the interest rate, it's really unimaginable. You can see there's no form of investment that can give you that high interest rate. So for you not to lose your funds, then you need to be satisfied or you look at regulated investment. Yes, interest rate may be very low, but it is better to protect your little savings than taking very high risk. We're all aware of the era of the MMM, and overnight a lot of Nigerians lost billions of naira because when we are talking about even savings. So when you look at the capital market, we don't see we are currently not seeing a lot of interest as we see when all these other products open up. And so investors should watch out for investment that are giving ridiculous rates. Once those rates are not obtainable in the market, you also try to call your investment advisors to give you more, to enlighten you on any products that is being pushed to you. I think doing that would help you limit the risk of losing your funds and putting it in on regulated funds. We also know we have the crowdfunding. There are a lot of agri investments there, but I know the SEC is working on a rule. I think the draft has been working on a rule to see how that segment can be regulated, so that we don't wake up overnight and we discover that a lot of investors are losing their funds, because a lot of while you have the genuine ones, you have a lot of um, a lot of people taking advantage of that platform because of the interest they've seen that investors have generated over time.
The Securities and Exchange Commission can increase youth participation in the capital market?
Yes, I think the first thing we need to look at is we need to first include investment securities, not about investment securities, into curriculum across, even from primary to secondary school, then to university. That's where most youths would have built that culture of investment. They will have more understanding of the types of investment that are available. Then it will be easier for them to cultivate that culture if they start working. So, bringing the youth, we need to understand what entices them. Currently, there are a lot of FX platform, and for a lot of the youth may not understand how it works, and they lose a lot of money. But the way those platforms have been designed looks very attractive, looks very interactive. These are some of those positive that we can also, for the capital market operators, they can emulate and build a platform, whether it's for stocks, whether it's for fixed income transaction, that looks very interactive, as is artificial intelligence. And as a result, you could see youth also migrating to these platforms, and they will also want to gain a lot of understanding about the platform and investments.
Now, we still observe the issue of unclaimed dividend is still high, despite the SEC awareness in this space. What steps do you think capital market operators can take to reduce the accumulation of unclaimed dividend?
Okay, thank you. I think the first step is we need to first identify what is responsible for the accumulation of this interim dividend. And one major factor, based on my own experience in the market, is that the process of claiming the dividend is still very manual. I know a lot is being done to see how they want to automate that. So beyond even the past dividend, this current process will continue to accumulate a lot of unclaimed dividend. Currently, when you open your account, the details that I feel regulators and the CSAS requires are already collected at the point of opening your account. So if you are buying shares in the secondary market, I don't expect you to begin to give dividend form again. And all those things leads to accumulation of accumulation of dividend rather. So we need to come up with a structure that once you are buying, especially in the secondary market, capture your details from the point of opening your account. And as a result, your dividends should be automated, because your BVN is being collected at that point. Your bank account details are also being collected at that time. So I think with that, there should be no process required to claim your dividend. And if we're able to adopt that, it will resolve accumulated dividend going forward, while we also look at how we want to automate the process of the accumulated ones.
Now, the NSCA and FMDQ have also been in the forefront of investor education. How far has this initiative improved investors' participation in the equities market?
Okay, thanks. For the NSC, we've seen that aggressiveness, that initiative of taking that financial literacy to the youth. We've partnered with them going to the NYSA camp. We've seen how a lot of interest have been generated. Also, the FMD also have an annual program that they run on financial literacy. And I believe that if that is also sustained as we progress, those participants will be like an ambassador for the capital market. And as we progress, we'll be able to have more participation and also more understanding of the products that they can invest into. Yes, we look at the fixed income market is still valid for most HNIs or for institutional investors. But with fund managers coming up with mutual funds and coming up with platforms that can easily enable investors to subscribe and monitor their investment, then we believe that that would also increase the interest and the attraction that we would see from potential investors.
All right, thank you very much, Mr. Ayodeji Abel, for your time on the program.